Good morning, Cressivo community. I'm Michelle. Welcome to the channel. This is where we talk all about options trading, selling puts, selling covered calls for income, for weekly income is my preference. Let me know in the chat if you'd be so kind to let me know if you can hear me okay, see me okay. I did post a something online this morning that I haven't had internet all morning. So I'm on my hotspot, and sometimes my hotspot does not work that well for a video. So I think you can hear me and see me because I have my iPad right here. And let me see if I can hear the audio. Yeah, I think you can. Oh, Shalita says loud and clear. Thank you. I appreciate that. Okay, so today's Friday. Friday is like one of the best days of the week. Not because like your work week is over, because you're working Monday through Friday, but because that's the date of option expirations, right? And I mean, every day is a great day. My personal favorites, though, are Fridays and Mondays. So Fridays you have contracts expiring, and oftentimes you should look at perhaps maybe closing them early. It's based on a few different things. We're going to go over some of that right now in this live stream. And then maybe you want to start looking at, okay, well, I'm just looking at my Spectrum is my internet provider. So they said still out. It's been out all morning since, like, I don't know, I think I got up at 4 this morning and it was out. And they kept saying it's going to be back at 8, it's going to be back at 9, it's going to be back at 1, it's going to be back at 3. So I'm not sure about that. Joyce says we can hear you. Cool. So yeah, anyway, like I'm saying, on Fridays, it's important that you look at your positions. Maybe you want to make some changes. Mondays are great too because, you know, that you have confirmation, let's say, of things that either expired or got assigned on Friday, and then you make moves. It's all about not just making money, but mitigating your risk. Risk is like the most important thing. And so let's hop into this account. I haven't really looked at this account in a while because this is the account that I was using Alpaca for. And then I found out that they don't offer the ability to dictate which lots. And that is so important, you know. Let me take a moment and go over that. When you buy, let me back up for a moment, actually. When you trade in the way that I talk about on this channel, the basic strategy, selling a put, if the stock goes down, you buy the shares, then you sell a covered call. If the stock goes down more, you sell another put. And the purpose of that, you know, oftentimes I'll say like average down your cost. And that's kind of like, you know, the gist of it in its like simplistic version. But most importantly, you have the ability, as you buy more shares lower, you can tag which lot to which contract. And usually it's better to do that. So let me back up and let me pull up a, let's see, new document. I'm going to pull up some notes right here and I'm going to show you on my screen what I'm talking about, right? Okay, so I think I did this the other day, but we're going to do it again. Let's say, let me just make this bigger here. Give me a second. Let's say you have 100 shares of ABC stock. And you bought that stock at $50 per share, right? And then the stock goes down. So you buy another 100 shares of ABC stock at $40, right? Now you have 200 shares of ABC at $45. So we could do that kind of easily in our head. If I have 100 at $50 and I have 100 at $40, that means I have 200 at $45. That's my average basis. Now you have one of two options when you sell a covered call. You can sell 2 contracts, right? So here's option number one. Option number one, sell 2 contracts, strike price of $45, right? Or you can sell 1 contract at $40 and 1 contract at $50. Now, I prefer the latter, right? So my preference is to sell 1 contract at $40 because first of all, you're going to make more money, right? Because the closer the strike price is to how much you paid for the strike price to where the stock is trading, the premium is higher, right? And that's the same for covered calls or puts, right? So if we have a stock that's trading here, a put that's here is going to be more expensive than a put that's here, right? And on the call side, it's the same thing. A call that's here is going to be more expensive than that higher price. So number one, you're going to make more money. And number two, probably more important than making more money, you're going to be able to flip your money out over and over and over again. So we've been doing that on this in this portfolio a few times. We did that with Oracle a little bit. We were doing that with SMCI, buying more shares as it goes down, sell a covered call to that lot. And it's important that you work with a broker dealer that supports the ability to do that. It's interesting because for as long as I've been trading, 29 years, I just kind of assumed that all broker dealers offered that functionality. I've only really traded with the big ones, right? So like Schwab, big broker dealer, Interactive Brokers, big broker dealer, E-Trade, big broker dealer. I never personally traded with like, the smaller, newer ones, right? Like Webull, Moomoo, Robinhood, these kind of small like fintech companies that have come out the last few years. And I never traded with them. And recently I found out that they cannot, they don't allow the ability to tag that lot. So if you have one of those broker dealers that doesn't let you do that, you need to go the other direction. You need to like really take your money and transfer that elsewhere, because you're not going to be able to do it correctly. Like you have to have the tools in order to do that right. So that's super important. So, and that brings me kind of to my, let me talk about, and I'm going to go through some of the questions as well. Let's see. So Joy says, somehow I realized a loss on a call. I owned 50 shares. I bought 50 more so I can trade. It got called away for a loss, even though my basis was under the call strike. Now, let's go back to our scenario here. If you sell, let's just use that as an example. I have 50 shares of ABC that I bought for, I don't know, $60, right? And then I have 50 shares of ABC that I bought at $45, right? So the way you're going to calculate that, your average basis is going to be, and you could use the calculator to do this. You can use this calculator here, this averaging down calculator on the left-hand side in the app. But let's just do it like mathematically. The easiest way is 60 plus 45 divided by 2. So now you have basically 100 shares at 52.50, right? 100 shares at 52.50. So that's your average basis. Now, it gets a little confusing when you have 50 shares and 50 shares because that's not a whole lot, right? That's not a whole 100 shares. And the way it works is this. If you were to sell, let's say, one 52.50 call, right? You're going to have some that are going to have a loss. So in other words, you're going to, there's no other mathematical way to do it. You're going to have 50 shares allocated to this $45 and 50 shares allocated to this $60. So you are going to see a loss on 50 of those shares if the numbers are like this. That means it's going to create a wash sale. So anytime you take a loss when you sell shares, like, I bought shares at this price and I sold shares at a lower price, that is, that can create a wash sale. That means that you can't, or you shouldn't, trade that ticker again for another 30 days because wash sales have 30 days in front of us and 30 days behind us. A really good way to practice some of this, and it's great that everybody, or not everybody, but it's great when people are trading, but also even when you're trading, it's really advantageous to paper trade, right? So just to have like a paper account that's not real money, that you can kind of practice things and get your feet wet a little bit more. That's part of the reason why I created this paper trader module in the account. So all broker dealers, I want to take a minute to talk about this. And hopefully you guys can still hear me because I think on my end, I show my internet is not stable. So hopefully you guys can hear me. A lot of broker dealers have paper trading accounts, but they don't really work that well in the sense that, when you put an order in, the fills aren't exactly what you would see in a real live account. number one. And number two, you don't have the ability to like look at your realized gain loss, look at your transactions, run different reports. So what I did was I created this paper trader module to mimic the exact like functionality that we have with real live accounts. So it lets people do a couple things. Number one, if you never traded yet, right? Let's say you're brand new to trading and you're trying to get into options trading, but you want to, be a little bit cautious. You want to lose money. You want to kind of get your feet wet, maybe understand things a little bit better. It's a great platform to do that. And also, even if you do have experience in some trading, it's also a great platform to kind of like check things and maybe practice. Like I'm going to buy, 50 shares of ABC at the market, and then maybe I'm going to buy another 50 shares, next week or the week after, and then I'm going to sell a call, and I'm going to see how that works. And that's a good way to do that without, let's say, using real money. So it has a lot of advantages. So for example, if we look at this paper trader account, we can see these are just some test positions that I put in here the other day. And by the way, all the pieces are synced together. So let's say, for example, I'm looking at the trade builder is where, let's say you already have a ticker in mind, and I want to trade, I don't know, let's say Bloom Energy. That's been kind of like this hot button lately, right? And I want to take a look at Bloom Energy just as an example, and I want to look at next Friday. I can pull up all the different strikes that are available, and it's sorted by delta. Now remember, delta is kind of like that cheat sheet way to understand what's the statistical likelihood the stock is going to drop from where it is below the strike price by the time it expires. So let's just kind of go far away a little bit, like let's say a 15 delta. It's only 15% likelihood. It's going to pull up our info that we need to understand, we need to look at in order to make an educated decision, right? So and then also we can look at a lot of different things here. We can look at, okay, now the price of Bloom right now is 218, so that's where it's trading currently. If, for example, we were to sell a 190 strike price, it's about 13% away, so it gives us an idea of how far it would have to drop to require us to buy the shares. It tells us what the premium is. We can look at the bid as well as the mid price or the last price traded. So it gives us a lot of functionality. And then basically it calculates our rate of return for us. And then we can also, what I'm trying to do is make things as easy as possible, because sometimes trading in general and options and stocks and things like that, nobody learns this stuff in school, right? So it's kind of like, oftentimes it's one of those things that you kind of stumble across like when you're older and you're like, like what's that options trading? Like, how does that work? And so I find that it's easiest to make it as simple as possible, right? Like less stuff to worry about. You can only fit so much stuff up in your head, right? So I try to put as minimum amount of like all the important stuff, kind of like, let's say if you're in school and you're doing a book report on, I don't know, whatever, Huckleberry Finn. And instead of reading the book report or the book rather, you go and buy the Cliff Notes that kind of gives you like this synopsis. This is kind of the same thing. So here's our Cliff Notes version, and it's like the synopsis of the trade, right? And then I could just send it to the paper trader account. So as an example, let's just do this as a test. It's going to pull up our trade ticket here. And then it's going to give us the ability. I can sell the contract. I could buy the contract. I can trade it at the limit price or the market price. I can put a day order in or a good till cancel. Very similar to like live functionality or regular broker-dealer functionality. I can change the price here, right? So let's say I want to put the order in at, 268 as an example. And then I could send that to the paper trading app, and if and when that gets filled, that is going to show up in your paper trader account over here, right? So here's our working order that I just did, Bloom Energy, and then if you want, you can cancel it and input a new one. So all the pages are connected with one another. It's really like a very good learning experience to be able to go through that. And as I'm talking about that, this is really exciting, and I know I haven't really done any, later today I'm going to post some videos to provide more details. But what I did was I launched a paper trading competition, right? So first of all, it's kind of good to have like a contest, but most importantly, the purpose of it is to learn. Again, if you're brand new and you never traded options before, or as well, if you're already trading and you're getting your feet wet and you're pretty good at it, but you want to like get better, I'm a big believer in lifelong learning, right? So I'm a lifelong learner. Like I've been doing this for a really long time, but sometimes I stumble across things that I hadn't realized. Like for example, I didn't realize that all broker dealers didn't allow the ability to designate a lot when that lot gets assigned. I never came across that before. And oftentimes, as in anything, we don't know what we don't know until sometimes we stumble across it. So I highly encourage all of you guys here in the community, whether you're brand new or whether you've been around the block a little bit, to participate in the paper trading competition. So first of all, you're going to be able to use the paper trading app that's brand new. It launched to the community. I think that was yesterday. I made the paper trader live, and then this morning I launched the registration. So you're going to go to apps.cressivo.com/cup, and there is a It is in the, where did I put it? I think I put it, I sent an email to the people in the inner circle and the people that already have the software. So you can go there, and it kind of talks a little bit about the contest. It's $100 if you already have the software. And by the way, that $100 gets paid out in prize money, all of it, 100%. So the purpose of this is to like help people learn in a fun and interactive way. If you don't have the software that I'm talking about, this software here, the Cressivo app, if you don't already subscribe to that, then it's $200. So 100 of that goes toward the prize money, and then 100 of it goes toward your software. And by the way, that's a very significantly discounted rate, because right now the price of the software is $99 a month. So it's a significantly discounted rate with the intention of stimulating people's interest in learning. And then we're going to have a leaderboard. I haven't created the leaderboard yet because the contest starts September 1st. So, but you can register now. So registration is open. Also, there's like a link to the official rules here, and you could talk all about it. It's open to people in the U.S., by the way. And I kind of struggled with this a little bit as I was doing some due diligence as far as like what's required, what's allowed, legalities and such. There's a lot of different things that I had to be aware of and figure out for international people. So the first, hopefully this is going to be the first of many Cressivo Cup challenges and paper trading challenges. No real money, which is great. So you get to learn in a simulated environment. Hopefully my intention is to open it up to international people down the road. And you can participate if you're not a U.S. resident. You can participate, but you can't share in any of the prize money. So you don't have to pay for the prize money because you can't be able to win any of the prize money, but you could still participate. And I seriously encourage people to still do that. You'd have to email me directly, and I have to set you up manually for that. But this kind of talks about, just how the rules work, how the prize money works. It's not just the first person takes all the money, because I think that's like not that good as attractive as let's have the top 5 people or the top 10 people or the top 25 people. So depending on how many people enter, it's all listed here. And then if you have any questions, you can certainly email me. So I'm really excited about that. I think right before this call I checked, and I think we have some registrations already. I just opened that up this morning. But as I said, my internet's been in and out, which is kind of frustrating. It's interesting how we get like used to these like basic things, right? Like internet, like, oh my gosh, like 20 years ago when we didn't have internet, like it was no big deal. But now that it's, so prevalent, it goes out for, I don't know, a few hours, and it's like a major inconvenience. It's kind of funny how that works. Evan says, hey, Michelle, I think Evan is the 21-year-old kid, if I'm not mistaken, who sent me an email. I'm so excited about that. This past weekend, I went to, my son has a really good friend who had a party because he's been out of the country for a while, and he came back. It's kind of like a family/friends party. And I was talking to one of his friends about options trading. and my son's 21. So I'm very passionate about like younger people who are interested in options, because man, it can be, it's so life changing. So it's great when it happens when you're older, but how cool would it be, like for those of you who are in the audience, like just starting to trade, how would you have felt if you knew this kind of stuff, let's say 5 years ago or 10 years ago? Do you think about like, man, where would I be right now if I, started my options journey 5 years ago? So bravo to you, Evan, for starting young. What's the lowest rate of return that you would go? That's a really good question. And Evan, check out the paper trading. You're going to learn a ton of stuff in the paper trading module, and in the competition. Also, by the way, I'm going to answer your question in a moment, but I'm also including a weekly live Zoom for all the participants in the contest, because I want to be able to talk through like, okay, here's some good trades that we're seeing. Here's some maybe not so good trades. Here's how you can improve your trades and that sort of thing. So that's really exciting. So it's like an opportunity to like learn, use the software, learn how to trade to begin with, or learn how to trade better, right? And be able to win money at the same time. Like, it's like this trifecta, like, I don't know, it's like all the stars align. Super cool. As far as the lowest rate of return that I would go, it's different for everybody. I personally look at like a 50% annualized rate of return. I want to be able to like be wrong sometimes and still make a lot of money, right? And that concept comes to me, like was kind of ingrained in me, I guess you'd say, from when I first started trading, like 1997, when I was first starting trading. When I was at that time, I was trading commodity futures and options, so similar to what we're talking about. But this channel, we just talk about stocks, and I've only done stocks and ETFs here and there. No more commodities, not in many years. And what I originally sort of like, where that comes from originally is, you want to be able to have flexibility. You want to be able to create income on a regular basis, no matter what happens. Because here's the thing, guys, and it's so basic, but for some reason people just don't recognize it most often. I'm not sure why. I think it takes a while to sink in, right? We don't know where the stock's going to go. I don't know if it's going to go up or down. Who knows? Like, I don't pretend to know. I don't know. And I want to make money regardless. So if I'm targeting, let's say, like a 50% rate of return, I can be wrong sometimes. And guess what? If I make 30% or 40% annualized, hey, that's not a bad deal either. I'm a big believer, like, shoot for the moon and hit the stars on the way down. Like for this paper trading contest, my intention is that we get 1,000 people registered. Like, how cool would that be? Like, shoot for the moon and hit the stars. 1,000 people registered would be $100,000 prize, right? And actually, I think I might have that somewhere here. Here's sort of like how that first prize would be $50,000. Like, how cool would that be? So that's what I'm targeting for. And then, if it's less than that, I'm okay with that too. I like to shoot for the moon, hit the stars. And your question, Evan, is very similar. What rate of return do you target? I never, by the way, trade things that have very low volatility. Let's kind of walk through an example. Let me go into the trade builder is probably the easiest way to look at that. Let's look at SPY. This is like the textbook example that I use all the time, because so many people like SPY, and I think it's like one of the worst trades to do when options trading, right? So let's see, what's Friday's Friday would be the 14th, right? So Friday the 14th. And I'm going to look at, here's my strike prices, right, with the deltas. And let's kind of go through, what did we look at before as an example? I think we looked at, I don't remember, 15 delta or something like that. It's kind of like far away, so, it's less likely to have to buy the shares. So let's look at that. Now, by the way, SPY, first of all, right off the bat, is kind of expensive, right? So it's $773 per share. Oh my God, it's expensive. So if this stock comes down and I have to buy those, I'm looking at, let's say, here's an example. If I sold a 15 delta, $760 strike price, man, I'm tying up 76 grand in capital. I can use margin, so I'm not going to go down the rabbit hole and talk about that. But I could use margin. But if I put up all the money, I'd need $76,000 for one trade. And mathematically, even though $100 sounds like a lot of money, maybe $104. if you calculate like your rate of return, how much you're bringing in premium versus how much you got to put up in capital, I mean, your annualized rate of return is only 7%. So you don't want to take trades like this. This is a perfect example in kind of response to your question, Evan, why everybody needs to calculate your rate of return before you put the trade on. I meet so many people and I talk to so many people on a regular basis who don't do that. And it's so easy to do. You can either use the app or use a calculator. I don't know, I could do it with a calculator too. Like if I'm making $104 and I'm putting up $76,000, and that's for a 1 week trade, let's say, I'm going to multiply times 52. And here's, it's not exact because of rounding and things like that, but you can use a calculator or you can use the app and make it so easy. Like, why not use the app? Especially like, man, $100 for 3 months. And if you register for the contest now, you get access to the app right away. So the contest starts September 1st. But today's like August 7th. So you have all the rest of August, 3 weeks, right? Then you have September, you have October, you have November to use the app for $100. Like, it's unheard of. It's unheard of. I don't know why I don't have 100 or 1,000 registered people already. Like, it's an unheard of opportunity. So this, I use this to kind of determine, like, this is a trade I'm never going to take. It's not enough money because I want to make more money. I use this module a lot. So the earnings edge, I think, is the best one. And that is going to, because, companies that have earnings coming up and their volatility is a lot higher, so it pays you more for the risk that you're taking. So this is kind of scanning, all the tickers that have earnings coming up in the next 2 weeks, and it shows the best trades. So it looks at a lot of logic that I personally built into this myself. Like, does it go up more than it goes down over earnings? I always want to go with the advantage, right? Like, I will always want the edge. It's kind of like being in a casino and you always have like the edge, or you're a bookie and you always make the VIG, right? It's kind of the same thing. That's like more of an illegal example with bookies and football betting and things like that. But it's like having the advantage of making money versus and I wouldn't say not making money, because when you trade options, one of the best things is you make money. If I sell a put, I make that premium. That premium goes in my pocket right away, by the way, and I'm committing to buy the shares if it goes down. Selling covered calls, same thing. I get the premium right away in my pocket, and I'm committing to sell my shares if the price goes higher. So this gives us like kind of a great thing. Now, this is kind of a cyclical thing. Like, you guys might have recognized like a week ago or something when I was running these scans, or if you have this software already, when you run a scan, like a week ago, I was running this on some live streams, and I had a lot of tickers show up as really good trades that you can look at. And now there's fewer, right? There's only a handful. And the reason for that is because a lot of times earnings season, have you ever heard of earnings season? So companies will have earnings around kind of like similar time frames. And so it's kind of like the cyclical thing. So sometimes you're going to have more opportunities than others. But you would use this to kind of like, let me take a look at Cisco. I mean, I've heard of that company before. It's kind of a big company. And how does that work? And this kind of walks you through it. And most importantly, it gives you like, okay, like here's perhaps the best trade that you can look at. Now, you got to use your own due diligence and think, okay, do I like that ticker? Am I okay buying the shares at that particular strike? Does that fit my account size? So those are only questions that you can answer, right? I'm just showing you examples on these live streams. ET Phone Home, whenever I do a covered call that is below my basis, I would monitor it to roll over where buy to close is less than the premium I received. It's best to do this before Wednesday to avoid decay. So you can, so let's talk about that for a minute, like selling a covered call that's underneath your basis. I was doing that quite a bit here in this account. I was doing that on AVGO, by the way. And AVGO is one of those tickers that I started with on these live streams, and I paid $4.77, and then the stock dropped so much, right? So I mean, if we look at a chart of the stock, like, you see how it kind of went way up, and then it kind of like fell down, and now it's kind of climbing back up again. So a couple of things that you want to take away from that. First of all, that's the nature of stocks. It's like a perfect example. They go up, they go down, they go sideways. We don't know where they're going to go. And so you don't freak out. Like, was I freaking out when I paid $4.77 and the stocks were down to $3.50? No. I was selling some covered calls below my basis. You have to be very careful doing that. Let's take a look and see how much money I made from doing that. I can look in the app here, and I'm going to sort AVGO, right? AVGO. And on AVGO, I made $2,905 in options premium. So that's what we're doing, is when we're selling options, we are selling options to create income, cash in our pocket. So this is cash in my pocket from that one ticker. And some of this, like we can look at this 405 call, 410 call. I was doing the same thing, selling for underneath my basis is $4.77. But me personally, you have to be careful, because there's a couple things. Number one, you got to be like committed to, okay, if the stock pops, I'm going to sell my shares, and perhaps I'm going to generate a realized loss. The way I do it, I don't roll things in the sense that. And just to specify rolling, because it's been sort of a contention on this channel. I don't know, it's kind of getting like a thorn in my side lately. When I refer to rolling, I mean like I'm buying my contract back at a loss, and then I'm selling a new one. Anytime you buy your contract back at a gain, that's always a good thing. And I don't refer to that as rolling. Maybe technically the technical definition might be, but I find that confuses people. So I try to teach what's super easy, right? And so if you're buying your contract back, like ET Phone Home is, I'm buying my contract back, and if I pay less than what I got in premium, bravo, brother. That means you lock in a gain. So that's always good. Just have a lot of due diligence and be careful. Like when I sell a covered call for under my basis, I do it very short term, and I do it super far away from where it's trading, right? That's kind of works best for me. And AVGO is a great example because it trades 3 times a week. So it gives me a lot of flexibility to be able to, okay, I'm going to sell a call for Monday. Today's Friday. I'm going to sell a call for Monday or Wednesday. It gives you more flexibility to, take in, I don't know, $20 here, $50 here, $60, $70 here, that kind of thing. So that's a good point. It's because if the stock has dropped a lot, it's hard to get a good premium. So yeah, so you just said something that's actually important. Let's talk about that a little bit. Let's say if I have the stock at $100 and it drops, as the stock drops further, you're right. It becomes difficult or impossible to sell a covered call to get any premium, and that's why you need to keep cash on the side to sell another put or buy more shares as that price comes down. That's like a must. It is not possible, in my view. Anybody can be successful short term. I'm telling you, it's not hard. So if you started trading a couple months ago, a year ago, even a couple of years ago, and you're a rock star, that's great and all, but that doesn't necessarily mean that you have the proper skills, tools, understanding, that kind of thing. For the long term, across different market cycles, particularly in a bear market, we haven't seen that in a while. It's important to really have the proper foundation, right? You got the right, rules in place, right? And so one of the rules that we talk about when we're trading for income is you have to keep cash on the side to sell another put if it goes down. Because long term, if you don't do that, long term you're not going to make money. You're just not, or you're going to lose more money than you would have lost. I'm always teaching these and explaining these videos in such a way that I'm not focusing on, let's make some money this week. This is not a get rich quick channel. That's not what this is. This is learn some foundational, amazing stuff that is gonna blow your mind away, and then use that to create income for the whole rest of your life, right? But you have to have rules in place to make that happen. And so that's part of the reason why I'm doing this competition, like to help people. Like you can fumble yourself, or you can try to learn with a group of people and have a mentor, me as an example, walk you every step of the way. Yeah, so that's hopefully that answers your question. Cool. So we're at 12:34. I try to keep these to 30 minutes because I got a lot to do. I'll let you guys know about these live streams moving forward. When the competition happens, I'm not going to have these live streams. I'll probably do live streams, but they're going to be relative to the paper trading competition, because I'm really going to focus a lot on that. I think that's an amazing opportunity, and there's only so much a time in a day to do like all the things that need to be done. So anyway, check this out. If you're an app subscriber, check out the Paper Trader. There's like a couple of things in there that I have to like, for some reason before this live stream, and I don't know if it's my internet, but like loading the options chain, I think I need to figure out why that button wasn't working. But all of these are linked. So if you're looking at the stock scanner, ETF scanner, Earnings Edge, Trade Builder, you look and analyze a trade, you can send it right here to your paper account, which is super cool. And then you can pull up your trade journal just as if it was a live account, and your realized gain loss. It shows you kind of like graphically, and then, ticker by, trade by trade and that sort of thing. It's super cool. So anyway, I want to say thank you for your attention. And today's Friday, so we're not going to be here tomorrow because tomorrow's Saturday. And but I'm going to put some new videos coming up. And check out the competition. So again, go here, go to the cup to register. It's here, and then there's the link to the rules page. If you guys have any questions, send me an email. And registration for that, by the way, is going to close on August 30th, right? I had to think, because we're starting it on September 1st. The advantage of signing up early, if you don't already have an account, is you get extra time for free. Because and you also want to kind of get your feet wet and kind of check out the app, particularly if you don't have the app right now, and you want to kind of see how do these tools work. How does it work for my positions? How does it work for realized gain loss? That's how the winner is determined, by the way, is your realized gain loss. That's the most important thing. That's what we're focusing on when we're trading. So that's what we're focusing on in the competition. So thanks for watching, and hope I see you guys on the inside. And in the meantime, have an amazing weekend, and happy Friday. Take care.